Look, we need to talk. It is almost midnight. I am sitting here with my third cup of black coffee, and I am looking at the economic reality of 2026. Let us be completely honest with each other for a second, because nobody else on your social media feed will tell you the truth. You are stressed out. You are watching the cost of living rise. Treasury yields are creeping over key resistance levels, and the dream of building a real financial cushion feels like a total joke. Oh shit, I get it. Every single day. You see these suited financial gurus on television talking about macroeconomic stalemates, interest rate swaps, and complex technical charts, making it sound like you need a doctorate from Harvard just to protect your hard-earned capital. Then you flip over to social media and see some 20-year-old kid standing in front of a rented sports car telling you that you are a loser if you are not making $10,000 a week day trading. Speculative garbage. It is a total circus. And it is designed to keep you confused, broke, and desperate. Here's the deal. Most of those people are completely full of garbage, and they are playing a dangerous game with your financial future. I am not here to lecture you because I am not a Wall Street analyst or a trust fund baby who started life with $1 million safety net. I am just a guy who was stuck in that exact same loop a few years ago, desperately trying to find a clear path to financial freedom. Let me tell you about my own stupidity because I made every single textbook mistake in the book. Back when I first started trying to invest, I thought the only way to get ahead was to swing for the fences. I took my tiny savings, money that I had worked 60 hours a week to earn, and I threw it directly into high-risk options and speculative trash stocks because some random guy on an internet forum said it was going to the moon. I woke up at 4 in the morning staring at my phone with a racing heart, watching lines go up and down, feeling like an absolute genius when I made a few $100s, and feeling like vomiting when the market turned against me. One morning, I woke up, opened my account, and realized I had wiped out thousands of dollars in a matter of minutes. It was money that represented months of hard work, completely gone, evaporated into thin air because I was chasing a quick fix. That was my turning point. The moment I realized that trying to beat the system by gambling was a guaranteed way to stay poor forever, I had to completely tear down my mindset and rebuild it from scratch. I started ignoring the noise, stopped looking for the next hidden gem, and actually focused on understanding how real wealth is built over time. And guess what? It worked. I managed to grind my way from absolute zero to over $120,000 in net worth, not by hitting a lucky lottery ticket, but by becoming incredibly disciplined, boring, and consistent. That is why I call myself your wealth partner, because I am right here in the trenches with you, sharing the exact data that took me out of that stressful loop. So, let us drop the nonsense and look at what is actually happening in the market. Right now, Citibank and Goldman Sachs have been putting out warnings recently that you seriously need to pay attention to. They are talking about tech fatigue, overbought conditions flashing red, and an institutional momentum chase that is highly concentrated in everything artificial intelligence. Retail trading volume is up 28% since mid-April, which means a lot of everyday investors are getting hit with massive FOMO, chasing the top of the market because they are terrified of missing out on the rally. When the big institutions start warning that things are getting overheated while simultaneously buying up everything on leverage, the game is getting highly volatile. Look at what just happened with Applied Materials. They posted a significant earnings beat, but it did not drive a strong post-market rally. That is a telling sign that indicated tech fatigue is genuinely emerging and the market might be due for consolidation. We are also seeing speculative IPOs like Cerebrus go straight down since pricing, because once you strip away the accounting tricks regarding the valuation of warrants, it is fundamentally a money-losing company. Meanwhile, the broader market breadth is sitting at its worst levels since late 2022, as investors dump their losers to chase a handful of extreme winners on leverage. But here is the anti-consensus truth that the bears do not want to hear. Even though things look crazy, and even though treasury yields are challenging equity valuations, trying to short this market or sitting entirely in cash waiting for a massive crash is an absolute fool's errand. The market makers love volatility and they love watching people lose money on both sides of the trade. If you are sitting completely on the sidelines with all your money in a standard checking account, inflation and sticky economic data are eating away your purchasing power at a staggering rate every single day. Look at the structural shift happening right under our noses. While hardware giants might take a short-term breather, the upcoming SpaceX IPO is acting as a massive magnet for capital. With institutional giants like BlackRock looking to deploy billions of dollars into it, this massive liquidity injection is driving hard data center infrastructure spending, highlighted by massive infrastructure deals like the recent partnership between Anthropic and cloud platforms. In fact, Anthropic just secured a massive $30 billion capital raise at a $900 billion valuation, ensuring a historic influx of cash directly into data center leasing and hardware infrastructure. This massive wealth effect means that even if hardware consolidates, the capital is highly likely to rotate directly into lagging sectors like software, creating a powerful short squeeze scenario for high-quality tech platforms. So, how do we actually win in this environment without losing our minds or our life savings? We do it by becoming aggressively boring and implementing a bulletproof portfolio strategy that does not rely on guessing the macro future. Let us talk concrete numbers and real strategy. If you want to actually build sustainable wealth today, you need to structure your portfolio like a fortress. My personal philosophy and what worked for me to cross that $120,000 milestone is built on a very specific framework. Think about allocating 70% of your investment capital into a broad market index fund like VU, which tracks the S&P 500. Why VU? Because it gives you a piece of the 500 largest, most profitable companies in the United States. When the largest enterprises in the world make money, you make money. You do not have to guess which individual hardware or software company is going to survive the next decade, because VEO automatically filters the winners for you. Next, you allocate 20% into a high-quality dividend growth fund, like SHD. SAG is your secret weapon during periods of market volatility and tech consolidation. It focuses on fundamentally strong companies that have a long history of increasing their dividend payouts year after year. When the market goes sideways or takes a painful dip due to geopolitical tensions or fluctuating yields, those dividends keep rolling into your account, giving you cold, hard cash that you can automatically reinvest to buy more shares at a discount. It is the ultimate compound interest engine. Finally, you take the remaining 10% and put it into a growth-focused fund like VUG, or use it to take calculated positions in individual companies that you have deeply researched and actually understand based on their underlying free cash flow. This 10% is your tactical allocation, your way to capture extra upside during sector rotations without putting your entire financial foundation at risk. If your speculative growth positions take a hit, your core foundation of VO and SAG is still completely intact, collecting dividends and growing over time. Look, this strategy sounds simple because it is simple, but do not confuse simplicity with a lack of sophistication. The entire financial industry wants you to believe investing is an arcane, overly complicated science so they can charge you high management fees to underperform the market. The real challenge is not understanding the math. The real challenge is mastering your own behavior and emotional state. The absolute biggest edge you have as an investor in 2026 is not some secret trading algorithm. It is your time horizon and your willingness to live below your means. Living below your means is the ultimate cheat code for wealth generation. We live in a culture that is completely obsessed with looking wealthy. People are taking out massive high-interest loans to buy luxury assets they cannot afford, financing designer items on buy now, pay later apps, and spending hundreds of dollars every weekend just to post a 10-second video on social media to impress strangers. It is a massive trap. They are trading their long-term financial freedom for a temporary, fleeting illusion of status. If you want to get truly wealthy, you have to be willing to look broke to people who are actually broke but pretending to be rich. You need to look at every single dollar you earn not just as a piece of paper to be spent, but as a tiny worker that can be deployed to go out and make more dollars for you when you cut out the wasteful spending and automate your investments so that a fixed percentage of your income goes straight into your portfolio every single month. You are playing the game on veteran mode. That is what we call automated dollar cost averaging. You do not try to time the market top. You do not try to guess if Monday is going to be a red day or a green day based on international trade news or political stalemates. If the market goes up, the total value of your portfolio expands. If the market drops significantly due to tech fatigue or yield spikes, you celebrate because your automated investment just picked up more shares of great companies at a massive discount. You win either way. It takes away all the stress, all the late-night anxiety, and all the emotional mistakes that wipe out 90% of retail investors. Look at the biggest investors in human history, the individuals who survive multiple market cycles. They do not day trade options on leverage. They do not read short-term charts frantically. And they certainly do not panic when a single sector takes a breather. They understand the long-term trajectory of corporate profitability and capital efficiency. When the market gets fearful, when the headlines are screaming about institutional warnings and technical fatigue, that is exactly when the most massive wealth transfers happen. The people who panic sell their index funds at a lower level are handing their future wealth directly to the disciplined investors who have the stomach to hold through the consolidation and keep accumulating. I want you to really process this because this is the core DNA of everything we build. Wealth is not built by being the smartest person in the room. It is built by being the most disciplined person in the room. Stop checking your portfolio balance every 5 minutes. Stop listening to the hyperventilating talking heads on the news who profit off your panic. Focus on increasing your primary income. Keep your fundamental living expenses low and aggressively feed the machine that is your core investment portfolio. The current economic environment might look intimidating with its narrow market breadth and sticky data, but it is also a massive, unprecedented opportunity for our generation to build real long-term leverage. While everyone else is complaining, panicking, or chasing highly leveraged speculative bubbles at the absolute top, you and I are going to sit back, stay incredibly calm, and execute a proven allocation strategy day after day, month after month, and year after year. That is how I cross my milestone. And that is exactly how you are going to achieve your own financial targets. We are in this for the long haul, we are playing the long game, and we are going to win together. All right, my coffee is completely empty and the sun is going to come up in a few hours. Keep your head clear, stay incredibly disciplined, and let us go secure the financial future we actually deserve. I will see you in the next video.